Today at Wealthy Wally, we're going to tell you how you can make large profits without taking huge risks with these closely guarded secrets from the Wall Street billionaires. Warren Buffett, Ken Fisher, John D. Rockefeller, these are all names you've heard before, and they've all earned billions of dollars with these time-tested investment methods, and now it's about time that you learn them too, because we've been using them for years, we've made lots of money, and now we want to share how we've done it, how you can do it, and how we can all win-win together. So discover how these big boys rule Wall Street, and we'll get to know their tactics so that you can learn them and that they can work for you as well. Did you ever wonder why most people always lose money in the stock market, while the super investors make large sums of money in the stock markets all year round? Then obviously this is going to be the letter that is the most important that you will read this given year. So in other words, we're welcoming you into our Wealthy Wally community. We want you to strive for better things in life. We want you to be able to invest your hard-earned cash in the stock market, but not blatantly in any way like others are telling you to do it, through a system, through options, through hype, through things that will most likely make you lose a large percentage of your capital base in the short term if you don't, if you're not part of the 1 or 10% people that are going to get lucky and make money. So remember that. People who day trade, who talk about hype, who have strategies and systems that are revolving around investing around momentum, most likely will lose money 90% of the time. So the odds are definitely against you. And if you don't have time to spend in front of your computer all day and to do countless hours of research to develop a plan and to develop watch lists to know which stocks are going to be the next movers in the next few days, you most likely will lose money. So that's important whenever you hear about new systems, about stocks, about day trading. You have to be in front of your computer a significant amount of the time during market hours for you to have a chance to make money over the long run. And even at that, the odds are stacked against you. So back to our story here. Have you ever wondered why Warren Buffett, Bill Fisher, Carl Icahn, Peter Lynch, and all of some of these other multi-millionaire people, how they became so rich? Well, it's because they're using the same formulas, the same time-tested strategies. And it goes a little something like this. They all made their fortunes by using the same investment things. And we're talking about 3 investment strategies in particular that these guys know by heart. So worldwide, there are hundreds of thousands of people who are mimicking these time-tested methods close to perfection. And we are some of these people. They are the true heroes and the living proof that these investment strategies not only worked yesterday, but work today and will continue to work tomorrow. And now you have a chance to be part of the team, to be one of these people who can make lots of money using these time-tested principles and strategies. So, what are these strategies? We're going to get to that in just about a second. But be attuned to what we're saying. They have made a lot of other people wealthy, and they continue to make individuals wealthy in the future. They are logical investment processes and concepts that anyone who wants to make money will make money. So before we reveal the strategies to you, let us tell you that they are often overlooked by regular investors. Many think that investing can be rather complicated, involve many hours of research, and require special skills and years of financial background. That is untrue. That is not what you need to make money over the long term while investing in the stock market. So there's a little catch, however. You still need to take a certain amount of time monthly to make sure that what you're doing is good for your portfolio and that you stay on track of your stock investments. So we're suggesting 5 minutes a month, and this is why we developed our product, the Wealthy Wally monthly newsletter, that allows you, the person who is busy, that has a full-time job, that doesn't have a lot of time to look over their investments. We've developed this newsletter that provides you our stock picks, where you can invest alongside with us, and all you have to do is verify every month what we're buying and what we're selling, and copycat essentially what we're doing. So what are these systems? What are the strategies we're talking about? Value investing, which is number 1. It's about buying, a stock that is worth $1 for 50 cents. It's that simple. Investors pay 50 cents for the stocks that are worth $1 in the future. What that means is the intrinsic value, the actual value of the company which we're purchasing, the market has not gathered all the information necessary to price the stock accordingly. Therefore, it's now trading at a discount. And these are the types of stocks that we purchase. So If you buy the stock at 50 cents and the value of the stock is actually $1, you're actually going to make 100% profit once the market factors in and reprices the stock price to its actual net value. So this is the method of Warren Buffett. He's used this for years and years, and this is essentially how he began investing back in the day. But thanks to the value investing method, he not only made a lot of money, he turned his fortune to close to $65 billion today. He's one of the wealthiest top 5 people in the world. It fluctuates, day to day or month to month. However, he continues to be, the super elite, the richest of the richest. So, as much as Buffett was a value investor, he also likes our next investment method, and this is another concept that he uses to this day very routinely. He adapted his style towards this new concept. In his early days, Buffett was a determined value investor who was taught by Benjamin Graham, who was his teacher at Columbia University. However, after he kept buying cheap stocks that are trading well below intrinsic value, he started to adapt his strategy to growth investing. So Buffett was a keen student, and he learned a lot from Graham, the dean of Wall Street, in the early days. But later on, he did get influenced by Charlie Munger, who is now today's Buffett's business partner, and they both own Berkshire Hathaway. So growth investing is about buying profitable stocks from well-managed companies that have good long-term outlooks. Growth investors do a lot of research, watch out for rumors, which is also known as the scuttlebutt method, which we'll discuss at length in future newsletters. And the growth investors also tend to keep their winnings or their winners for a long time, sometimes even their entire career, with no intention whatsoever to sell out of that stock. So growth investors buy quality stocks that have room to grow at fair prices. So you might have heard that Buffett buys stocks for the long run. He was once quoted, "I never attempt to make money in the stock market. I buy on the assumption that they could close the market the next day and not reopen it at all for the next 5 years, and then he would be comfortable with that because he knows that his investment is sound." This is where growth investing comes in. You invest in key companies before they are about to experience significant growth, and that's really the key here. The next investment strategy, our third investment strategy that we use at Wealthy Wally, is what ties everything nicely together. This strategy is responsible for most likely 2/3 of the total returns that most investors of today make. So at the beginning of an investment career, people want to invest in undervalued stocks, growth stocks, so that they can build up their capital base. Once they've gotten their capital base to a comfortable nest egg level, they then want to ensure that they can protect the capital base and continue earning dividends on that capital for all of eternity until they essentially die or pass on their fortune to their siblings or their kids and nephews and family in the second and third generation, so on and so forth. So dividend investing is really about identifying great companies that share their ever-growing profits with their investors for the very long term. Dividend investors are quite risk-averse and are keen on winning the race in the long term, and which they usually do because they're buying the sure thing type stocks of companies that continue to make large amounts of profits, that have large margins, and essentially we're buying these companies at times when others are looking at them as being a little bit less unfavorable. So sometimes their stock prices are a little bit lower, and that's usually when we buy into those dividend type stocks. So there you have it. These three strategies are simply the world's best kept stock market secrets, and will continue to be for years to come. So they are responsible for creating the majority of wealth for many hundreds of thousands of people, and it's time that you can benefit from them as well. So Warren Buffett created his vast empire by using value investing tactics, and he became one of the world's richest persons. Philip Fisher, on the other hand, became rich by practicing growth investing. He even was a true inspiration for Warren Buffett in his early days, who has implemented more than a few growth investing tactics in his career. John D. Rockefeller was quoted saying, "Do you know what makes me happy?" And it's a very simple answer for him. I like to see my dividends come in, and that's what makes him happy, knowing that the stocks that he bought are generating income for him on a quarterly basis, on a yearly basis, and the money just keeps coming in. He doesn't have to buy or sell new stocks. He's got a steady stream of income with those dividends. So the question is, why would Buffett, after all of these years of using, value investing, growth investing, care to change his system or his tactics if they work so well? And it's a complicated, question. However, it becomes apparently obvious to those that, you know, have followed Buffett over the years or understand the markets at large. He invests, you know, in the magnitude of over $140 billion in stocks. You cannot invest $140 billion the same way that you invest $1 million or $10 million or even $100 million. You have a material effect on the stock price if you start buying a certain company, because he has to buy a significant amount of stock to be able to invest $140 billion. Therefore, he can't buy a company, for example, that only has a market capitalization of 50 million or 100 million. He would make the stock price move significantly, and that's not something that he wants to do. He usually wants to enter a position before others know that he's entered the position, so that he has the advantage, so that he also has the edge for his long-term position. So all in all, investing is a fine art, not an exact science. You see, the best strategies don't always produce the best results forever. You have to adapt your strategy as the years go on. That's why they're called strategies. Investors need to change their strategies according to the leading conditions that call for them. And this goes for Buffett as well. Buffett now has so much capital, as I'm saying, that it's impossible for him to beat the markets year over year. Like, for example, he can't have the same average that he had years ago when he was making 19% or 48% on these odd years. It's just not sustainable. So we'll talk about this more later with the rule of 72 on how you divide, the interest rate, your compounded annual interest rate versus the amount of years. So if you take 72 and divide it by 10%, it takes you 7.2 years to double your capital base. Now imagine if you had 20%, so you go 72 divided by 20%, right? You're going to be doubling your capital now, not every 10 years, right, but a lot less than that. So the issue is that those returns that are in excess of 20% or 15% are very hard to maintain over the longer term, because his capital is so large that it becomes almost impossible, because Buffett's assets now form part of the larger average of the market. Okay, so he helps dictate what that overall average is. So for him to continue to beat it becomes even more statistically challenging as time goes on, because he owns a bigger piece of the pie. But luckily, you have a huge advantage over Buffett. You can still use the same strategy that made Buffett rich, and Buffett still believes in this strategy, as he has quoted things differently. And he said that if he had to do this all over again today in the markets that we see presently, he would be able to obtain margins of 40 to 50% a year in returns for his investors or for himself. And Sven, who is our co-founder of Wealthy Wally, he is our value investor, and he's proving, that his concepts, that Buffett's concepts, still do work today. Last year, Sven recommended Alcora Advanced Materials. So he talked about this before anybody even knew that this company existed, and the stock six-folded in price, making a lot of money for his subscribers. More recently, like a few months ago in June, Sven recommended to buy Semtrex, and his subscribers saw that stock double in just under 2 months. So Sven finds the momentum before it happens. He doesn't talk about a stock that is up 100% or 50% on the day. He tells you weeks or months ahead of the time the potential for that stock to move up because of the pure fundamentals and the actual intrinsic value of the company. So we're not guessing here. We're taking a calculated approach. We're doing a lot of research with different companies across the industry, and we're establishing quality stocks. We're finding these stocks for you so that you don't have to do all these hours of research. So we don't only read, reports and newsletters and other news releases that are out there. We read the actual filings from the companies through CEDAR, through the SEC on the US side, or any other regulatory agency that, mandates companies to file those material changes with regards to their company. So again, Alcora was a big play, Semtrex a big play, and these are just our two most recent ones. There's a lot more. Sven continues to make good money for us and for his subscribers since 2012 when he started doing this full time. And on a portfolio adjusted basis, Sven is making more than 20% per year on average for a subscriber. That's a lot, given the very low yields of 2 or 3% in the savings accounts that we get today. So more importantly, Sven always tells his readers first what he's going to do next. So he doesn't do it, he doesn't say, I've bought this, now you should buy it too. He recommends to you you should buy this at this price, and then he gives you the opportunity to buy first, and then he buys his order afterwards. So you always have the edge before him or before us at Wealthy Wally. We always tell you before we buy or before we sell, so that our clients, can benefit in line with what we're doing. So what we've done essentially is we've created the Wealthy Wally Stock Picks newsletter, where we're combining 3 winning strategies into one easy-to-read monthly newsletter. So last year, Sven looked for 2 more investors, myself, Dennis, and he also found Gentis de Klerk from Belgium, and together we formed a team. And collectively, we continue to beat the market since we all began investing individually. So we make available to you, and this is what we're talking about, is the Wealthy Wally Stock Picks newsletter. So unlike other newsletters, that try to create a lot of hype in the market or just try to create a large following just for having that online exposure, we're really aligning our interests with yours. We're buying what you're buying. We're selling what you're selling. We're not just suggesting that you buy something. We actually include those stocks into our own individual portfolios. And we started those portfolios at 10,000 American just so that we can get a lot of people to start following us with around the same amount, so that we can see over the years how much we can grow those portfolios into. So if you're convinced with what we're talking about, just hit the button below and we'll be redirected to our website where you can purchase our newsletter. If you still want more information, you can continue to listen on, and we hope that we hear from you soon. So for those of you that are still with us now, here's the bottom line, why you don't learn these things in school. Like, did you ever take a course about investing stocks or how to even do your taxes in high school or in college or university? Most likely not, if you didn't study finance directly in post-secondary education. And the reason for that, and the majority of what people don't think about, is if everybody knew how to do their taxes properly, how to claim the right exemptions, how to maximize their RSPs or their retirement savings plans, how to create a business for themselves and deduct expenses, the government would lose out on billions of dollars of tax revenue annually. So there's no incentive for the government to mandate for this, the educational school board to force people to learn how to do their taxes. So that's a big problem, number one. And the same thing goes for the overall stock market. If people knew how to invest their hard-earned money themselves, there would be no needs for brokers. There would be no needs for a banker per se, because you would learn yourself which companies are worth buying and which ones aren't. And you would never buy a mutual fund, because essentially all a mutual fund is a segregated fund that consists of multiple stocks under one umbrella. So the bank has an incentive to sell you a mutual fund for 3 reasons. Most mutual funds charge a management fee. So the managing team of that fund makes that 1% or 0.5% or 2% regardless of the performance of the fund. Secondly, the bank employees have an incentive to sell you the mutual fund because they have a quota to meet, and they get something in return on their performance reviews for that. So that's the big conflict of interest, are the people at the bank that tell you should be buying mutual funds. They always remember that they are working on a commission-based approach, and they always have to meet a certain quota. They are not acting in your best interest. They are acting in the best interest of the bank. So that's number 2. And number 3, most and foremost, is that if the bank can allow large amounts of capital to be invested in a mutual fund according to what they want, they have bigger and larger controls on volatility in the markets. And what that means is not as much money is coming in and out of the markets because people are buying into mutual funds over the long term, thinking that they're going to get larger returns if they just do dollar cost averaging and buy in repeatedly over months and in years. But that's not true. That will not happen 90% of the time. The first question you should ask when you go into a bank about mutual funds is, give me the performance of all of the mutual funds that your bank has sold for the last 30 years. And I guarantee you that they will not be able to give you any information for more than 10 mutual funds that have been around for 30 years plus. And there's a reason for that, because all the bad mutual funds that the banks sell, they usually close them out. They repackage the stock offerings or the prospectus under another umbrella, and then they resell them out to the customers in the next year. So it's very rare that you're going to see a mutual fund that's been around for 15 years plus and that's yielding 9-10% compound annual return. It is very rare, and there's a reason for that. So please Remember that before you invest in mutual funds. So bottom line here, what we're saying is you can become financially independent if you take matters into your own hands. And you deserve it. You work hard. You've saved this money by working 40-hour weeks, if not 50 or 60 hours for some of you. And you should be able to enjoy the better things in life, such as, you know, taking more trips in a year, maybe buying that new car you've always wanted, or even buying that big dream house that you wish that you could afford. So that's really what we're here for. Like, you've probably noticed it by now. I'm a young guy. I'm 31 years old, and we've been fortunate at a fairly young age, but we want to teach others so that they can benefit to the same degree that we've had, and that we'll continue to do in the years to come. So we're going to teach you how to make money. You don't need to do much. You just need to follow along with what we're doing. But if you have the patience to follow course, you will be wealthy as much as we are. So it's time to make that most important financial decision of your life. And what is that decision? It really comes down to, are you going to start investing today? Right? The beautiful thing is you don't need to quit your day job at all. You can keep doing what you're doing. Don't change a thing. Don't do anything different in your daily activities. All you really have to do is take 5 extra minutes every month from your busy schedule to start investing like the pros. And the way to do this is to create that initial desire, right? Do I want to achieve the greater things that life has to offer? You have to say yes. You have to be motivated to want something else. Do I want to achieve financial independence sooner? And that can mean a lot of different things for a lot of different people. For you, it might mean I want to retire 5 years earlier. For other people, it might mean that, you know, I want to be able to buy a larger house in 10 years from now. And it has a different meaning for everyone, and it doesn't matter. The bottom line is that you write down on a piece of paper and that you stick it on your cork board, on your vision board, on your wall in front of you, on your desk at work, and you strive to achieve those things, right? And at the end of the day, it's going to result in what we're saying here. You're going to be able to take more trips with your family and friends and buy that dream car or that house or that boat or that cottage that you've always wanted. But it comes down to making one simple decision. Am I going to start investing for my future today? So the only way to do this is to make yourself the gift of getting on the right path towards becoming wealthy. We will help you along your journey. We want to help you make money in the stock market because if you succeed, we succeed. It's another story, right, that we can share with our clients about how we've taken, you know, $10,000 and we've grown it into X amount over X amount of years, and that others in our group have benefited collectively. That's what we want, right? So the choice is obviously yours, but remember that the sooner you make a decision, the larger your profits will accumulate over time. Buffett started investing when he was 14 years old, so he had a tremendous time advantage, right? But you also have that advantage because now you've learned from what Buffett has done and what all those gurus have done, and the ones who've demonstrated success year after year, and we can apply those same time-tested strategies, which will make you wealthy over time. So it's never too late to start. You just need to act now and start investing in your future today. Many people have asked us, you know, I'm afraid to lose money. What happens? How do I get over that fear? So it is a true problem for many investors today. But in reality, you know, we have to understand where fear comes from fundamentally. And fear is what keeps us alive, right? So if you're not fearful of something, there's essentially, you know, a red alert or red sign that should be coming up because your system is not telling you, you know, that there's any caution going forward. And that's an even more scary thought. So you should be fearful of losing money in the stock market. Absolutely. We would, if we hadn't not done many years of research, we would be super scared as well. And that's where we come in, right? We are full-time investors. We research the markets at all times. We're looking and reading SEC filings, CETA reports in Canada, and we make the big map of, okay, this company versus this company is more likely to go up because, you know, there's more interest here in this industry, there's less shares outstanding, they have more cash at hand, things like that. So we're doing all this preliminary analysis for you. In the end, the decision is still yours to buy or not to buy. However, you can be rest assured that there's been a significant amount of research that's been done in our stock picks that we provide into our newsletter. And we also consult amongst our the three individuals that manage the 3 portfolios to ensure that we understand what each other person is doing so that one person doesn't go crazy by themselves in one day and say, oh, I'm going to take 50% of the portfolio and buy Coca-Cola. Even though Coca-Cola might be a great company, we wouldn't want to overexpose ourselves to one company. In the event of a black swan event, for example, if there was a big problem with Coca-Cola one year and the stock would drop by, let's say, 20% or something like that, we wouldn't want that for our investors. So, fear of loss is obviously much greater than desire of gain. The gurus, like the rich people in the market, clearly understand this concept and use it to their advantage when investing. And you can too. Imagine if you always bought good quality stocks when everyone else was selling during times of panic. You would always be purchasing quality companies when others would be dumping stock at a much lower price. So this allows you to have a huge advantage when entering your stock investing position. So again, because of the fact that we conduct so much research and we've prepared, ahead of time these lists of potential companies that we might want to buy in the event of turmoil, we can enter our positions relatively quickly. And all you need to do is continue to take 5 minutes a month, follow our newsletter, and see which companies we recommend to buy or sell every month. So don't make the mistake of putting the full responsibility of investing on yourself, only without using our help. This could cost you a lot of money at the beginning. Some people get lucky, and these are the people you hear about. They started off with 1,000 and they built it up to 10,000. When they started off with 10,000, they built it up to 100,000 within a year or two. These are the exception, not the rule. 90% of people who open brokerage accounts by themselves will lose a large amount of what's in there within a very short time if they do not conduct fundamental research on the companies that they buy. So, lastly, it's important to understand that Sven, Gentis, and myself, we analyze the market psychology. We're doing continuous research with the companies that we're suggesting to include in our portfolios, and essentially the ones that you're going to include in your portfolio. So this is our day job. You need to trust that that's what we're good at doing, and with time you're going to see that through the performance of each portfolio. So it comes down to our Wealthy Wally Stock Picks newsletter, and we're here to guide you throughout our investment journey together. During times of fear and panic, we will talk you through it. And rest assured that if you have any questions, you can always email us. And we're going to talk to you throughout those hard times because we're going to be going through them as well. And we can write you some explanations, some additional information as to why we think the positions that we're currently in are of sound judgment and that they will reap the benefits over the longer term. Many people just don't know where to start. Say, oh God, this is great, Dennis. I like what you're saying. You guys have a great website. You got some good information. This is it. What do I do next? Right. Bottom line is you're gonna have to open a brokerage account. So you're gonna have to go to your bank and you're gonna have to open a brokerage account, or you can read through our websites where we recommend different low-cost brokerage accounts that you can use. 90% of people just go out, open the account, start trading themselves. We don't think that's the right thing to do. You should have some sort of guidance as to which types of companies to buy and sell, because you can get lucky at the beginning. A lot of people do. However, it's during the times of loss and when the market goes against you that really tests, the performance of your strategy or the, rigidity or robustness of the investment strategy that you're using. So keep that in mind. You might be lucky at first. However, if you're not cutting your losses or if you don't have a plan of attack, what are you going to do when you start losing money? So this is, again, where we come in and we provide you our full guidance as to our methodology, our process, our transparent portfolios of when we're buying and when we're selling. So there's a lot of investing strategies, and there's a reason why I'm talking about it, because there's a lot of advertising about this out there, especially about the next foolproof system, the stock trading system that can make you 100% or 200% in a month. Be careful. There's a lot of things out there that might appear at first glance that will work. However, when it's too good to be true, it most likely is, and that's where that saying comes from. And these strategies are hard to replicate for individuals. For example, day trading, spread betting, like if you're playing binary options systems and things like that. Remember who wins on those systems. Like for a binary options trading system, they're making money off the spread, meaning it doesn't matter if you win or lose. They're making money every single time because of the way that their system is built. So in this game, which we're talking about, we're not selling you a system. We're not selling you, the new way to do investments online that's going to make you 1,000%. We're telling you that if you have the patience to invest with us over the years, we will have above average returns, and we're going to do that mainly through value investing and growth investing. However, once you build that capital base to a comfortable level for yourself, you will want to switch to dividend investment, where you won't have to buy and sell stocks as often, but where you can just start cashing out via the dividend payments that come in continuously. So just like Warren Buffett, Kenneth Fisher, Joe Greenblatt, and Pabry, like, they use their fortunes in which they continue to use today. So our monthly newsletter provides you with all the market research and investing knowledge you need to get started and guide you towards financial independence. So a lot of people, again, say, oh, I like all of this. I have a brokerage account. I've been doing a little bit of trading myself, but I just can't come around finding time to invest in by myself. And you know what? This is what our product is geared towards. It's to help people like you who work hard, have full-time jobs, want to have an investment portfolio, expose themselves to the market somewhat, but they just don't have the time to do countless hours of research. And that's where Wealthy Wally Stock Picks newsletter comes in. We do the research, we do all the hard work, and you get to see how we're building up those portfolios over time, what we're buying, what we're selling. And all you really got to do is send your order to market when we give you a signal when we release the newsletter. Okay, this month we're going to be buying, First Solar, and this is our price, and you just have to follow along with what we're doing. So it's really very easy. There's 3 pages across the newsletter, page 9, 11, and 13, where you have the value, growth, and dividend portfolio pages, and you'll see exactly which stocks form which portfolio, when we're buying them, when we're selling them, and what the target prices are for each stock. We must caution you, however, that Wealthy Wally Stock Picks is not for everyone, okay? And the reason for that is, if you cannot take that 5 minutes a month to routinely check the relevant sections of our newsletter to see what we're buying and selling, you most likely will lose money in the longer term. You might make money in the short term. However, if you're not having, a routine, disciplined approach to reading our newsletters, you most likely will lose money. So be aware of that. We're not, again, selling something it's not a get-rich-quick scheme. We're really in here for the long term. You're going to see us in 5 years, and 10, 15, 20 years. We're still all going to be here selling this newsletter and investing alongside our investors. So as the saying goes, slow and steady wins the race. If you have the patience to invest alongside with us, we will all make the same money over the long term. And also be aware that our portfolios are not immune, they're not foolproof against volatility, meaning we can take swings of percentage swings. So we could be up or down 10% or 15%, but we're comfortable with that level of risk. And you should be too once you've read, if you want more detail as to why we're entering a position, you will read what we're talking about, why we're choosing this company on that specific day, and the reasons for us to enter that position. So we're here to hold your hand, and in a good way too. We want to do this as a team. We want to help you, and at the same time, we're both going to make a lot of money together, and that's the goal. The main reason why we limit the number of our subscribers is because we do follow smaller companies with very small market capitalizations, and we don't want to materially affect the price of the stock when we recommend something in our newsletters. So for the purposes of what we're doing right now, we're going to limit the subscribers to 1,500. Don't wait too long to sign up if you're interested. The spots are filling up. However, again, the decision is yours. We might decide to bring that up a little bit over the 1,500 in the months to come if we feel that it's absolutely necessary, if people really ask us that they want to be part of the portfolio following. But we'll decide that at a later date. But for now, our promise to you is really, if you have any questions, you have any concerns that we haven't addressed throughout this, brief introduction to the Wealthy Wally Stock Picks newsletter, feel free to email us, because we're going to answer any question that you might have about ourselves, about others, about other things that are going on in the market. Whatever question you have, challenge us. Ask us your question, and we'll email you within a few days at most. Sometimes we even answer on the same day. And we want to work with you. We want to hear from you. We want to know what motivates you to make money, and we'll share with you as much as we can what we're doing as well. So in addition to our promise, our guarantee to you is that if you sign up and you don't like what we're doing and you say, oh, this is really not what I was expecting, no problem. Within 30 days, we'll give you your money back, no questions asked. You don't even have to give us a reason. We're just going to recredit you the membership fee for what you purchased. Again, you know, the last word of caution, there's a lot of stock investment trading systems out there guaranteeing 100, 200%, or even 1,000% gains. We're not selling a system, okay, nor did we invent a new investment strategy. All we're doing, right, is using the strategies of those who have benefited from them significantly over the years, who have made millions and billions of dollars. We've basically created the 3 portfolios, like dividend, growth, and value investing portfolios, where we do all of the research, we find these companies, and we buy them at opportune times. So a lot of times you're going to notice that some of our portfolios are in cash. There's a reason for that, and the reason is we're waiting for an opportunity to be in our favor to buy. We don't just buy for the sake of buying. We buy at very strategic times. And that's a little bit different from investing in a mutual fund or having private wealth manage your funds, for example, because they're going to want to put their money in the correct diversification per the portfolio. So for example, if there's only supposed to be 5% in cash of that portfolio, they're going to make sure that the other 95% is split between equities and fixed income. And we think that that's wrong. We think that that is where most people lose money. It's because of the fact that they feel obliged to always have 100% of their portfolio, or close to 100%, invested in equities or fixed income at all times. So this is a little bit different from us, but we do well that way, and there's a reason why we're doing that. So at the end, you have to understand that you can still make a little bit more money than we do. We're actually giving you the edge, meaning you get to buy or sell out of the position before we do. When we mention in the newsletter, okay, we're going to sell First Solar today at a price of $43, for example, we give you, 48 hours before we execute our orders to market. So essentially, you always have that edge. So it is possible, depending on how the prices of the stocks move up and down, you might make a little bit more money than us if First Solar were to drop significantly within that 48-hour period, and we would sell out 2 days later. We could theoretically sell a little bit, at a disadvantage to you. But that's okay. We're comfortable with that. And it basically comes down to making a decision again and to act. So 85% of our audience, they've signed up for a 2-year option. Probably because they have that longer term view in mind that they're going to be with us, they're building a relationship, and they want to see the profits continue to grow year over year. You do get the 15% discount if you sign up for the 2-year term, but you can buy for 1 year as well if you're interested. And we also have a 3-year where it has a larger discount. So if you click below, you'll see that you have the 3 options for the monthly newsletter. Be sure to look at the link below on YouTube. That's for the Wealthy Wally website URL redirect. So click on that, like our video if you like that. If you want more informational videos, I'll try to make one every 2 weeks if possible about different topics to see if people are interested. So thank you for listening. I know it's been a fairly somewhat of a long video, a lot of information to capture. However, the key here is to take action, right? So whether you join with us or not, invest in your future and start doing that today by learning, by getting the information that you need so that you can secure a better future for yourself, for your family, and for your friends. Thanks for listening.